Hey everyone, and welcome to Earnings Cheat Sheet for Friday, October 25th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And boy, oh boy, Ed, what a week, because I think we have something like 12 trillion in market cap reporting next week.
Yeah, it's actually 12 trillion just for the five that we're really going to focus on. So a slew of other companies that report on top of that, plus all the companies that are affected by some of these giants. So an absolutely enormous week, part of an enormous 2 weeks that for investors to be dealing with in terms of news.
Well, Tesla got things kicked off right, I guess. So hopefully the party continues. But we're going to cover all five of the Mag 7 stocks reporting next week. So why don't we start with Apple, which is scheduled to report fiscal Q4 earnings on Thursday, October 31st. Earnings are expected to rise 9% to 159 per share, while revenue is seen climbing 5% to $94.36 billion. And here's why we're watching Apple. It's going to be all about AI. We're going to be paying attention to any comments there, especially with Apple Intelligence only starting to roll out next week. At least that's what it's expected. And Ed, talk to me about Apple because there is some news this week that sent shares lower, that perhaps the company had cut orders for its iPhone 16 smartphones. And then we had an analyst with TF International Securities saying that they've really seen no evidence yet that Apple Intelligence is really boosting shipments in the near term.
Yeah, that seems to be that there's back and forth. There's little indications. Oh, demand's here, strong, demand's weak. It's like they haven't really figured out. It doesn't seem like a blockbuster. It hasn't really been that weak. And part of the issue is the Apple Intelligence, which is their AI. It really hasn't come out. This week they came out with some beta versions of some of the tools. I guess that'll start rolling out more officially in the near future. But the real stuff, like the Siri AI enabled Siri, that won't be out for several weeks, several months, and that's just in the US. Then you think about places like China where Apple is under a lot of pressure, it could be much longer than that. So it's a very slow rollout, and that's the big value add. And so if you're asking people, hey, you got to buy this iPhone, it's like, well, do you? Not really. It seems like, I mean, if the not if you're waiting for AI, at least not yet. So earnings are just not that tremendous. Obviously, people are hoping that AI can reestablish that and you can get this kind of tailwind again, but it's a slower growth company at this point.
Right. And Apple has always historically tended to be slower to market with some of these new technologies. But let's take a look at the chart, Ed, because Apple has been flirting with this 237.23 buy point. It's had a little bit of a losing streak this week, but looking for support here at that 21-day line. So how are you looking at this chart then with earnings approaching?
Yeah, I had previously been looking at sort of the 233 area as sort of an ugly handle or just a short-term high. There's a lot of trading there. But the fact that it hit resistance at the highs, it really feels like this is sort of like treating this as a handle. So if it can get above, it basically, if it go to new highs, then it's sort of broken that. I mean, I suppose if it goes several days and there might be some kind of break the trend line of the handle, but right now it's sort of straight down. It doesn't have that yet. So it needs to be breaking out. We'll see. If it does that, it could be actionable. Now, again, you just have to put in perspective. It's not probably going to have that mammoth run that we've seen historically over the years, and it has already had a big run when you consider it went basically from 164 to 237, and a lot of that was in anticipation of the iPhone 16 coming out. So there's some of that was already priced in. So that would be something that's actionable, but you also have to know what you're getting, that it's probably a slower mover over time now.
Right, and I'm jumping over to the weekly here, just to see because you've seen, these tight areas here. It did come below that 10-week line, but was able to regain that key level. So, talk to me about some of the fundamentals here, because as you said, slow grower. But what are you hoping to see, fundamentals wise, from Apple?
I mean, you'd love to see some, at least consistent double-digit growth on earnings, just, going forward. That sales growth may be lagging that a little bit, but there's some higher margin services, so it doesn't necessarily need to grow. You can see that the earnings have tended to outpace the sales, so it doesn't have to grow that. Stronger would be better. But yeah, that's what you want to see. You want to see that and especially you want to see that the iPhone 16 sales are pretty good, especially given that the AI isn't out yet. You want to see some signs of that. This is the holiday quarter coming up. So They want to see signs that that demand is going to be pretty strong, even if all the AI tools aren't there.
All right. Well, let's go to another AI play here, Ed, and that's Meta. Zuckerberg and co are scheduled to report Q3 earnings on Wednesday, October 30th, and earnings are expected to climb 19% to 521 per share, and revenue is expected to jump 18% to $40.19 billion. And here's why we're watching Meta. We'll be focused on cost and outlook figures, especially as it relates to capital expenditures. And Ed, let's talk more about Meta because we've seen this real turnaround since the year of efficiency. It's been a real big winner. Rejoined the ranks of that $1 trillion market cap tech companies at the start of the year. And analysts generally seem bullish on Meta right now because of the AI, especially in that area of digital advertising. So, what's on your radar with Meta as earnings approach?
Yeah, I mean, that is like, I don't know if it's like the super efficient is sort of like they stopped spending like crazy and the online advertising, two things. So they controlled costs somewhat, at least as a share of revenue kind of situation. And the revenue really took off, partly because for a while there they got hit, in 2022 or so because Apple announced new privacy things. And so it was difficult, it's like targeting advertising was a little tricky. Now they've worked their way through that. And so when that turnaround came in, you control the cost, revenue take off. That's a pretty good recipe for a company. Earnings have been huge. They're starting to slow just because of the law of, like big numbers, the tougher comparisons, but really strong results. Yeah, online advertising, we're going to key off of that. Like, how is that? Just, what they say about AI, with a whole lot of trends like social media. So this is a big deal. Like we talked about, like Apple, it's going to be with it. There's an ecosystem with the chip makers and some suppliers, but Meta and these other names, what they say about capital spending, what they say about those things, it is so huge. I mean, Tesla influences a few companies, but these companies are going to influence massively. So this goes for others as well. But what they say about capital spending, that's huge for NVIDIA and Arista Networks and all those other chip and hardware names. And what they have to say about how successful AI is, there's a whole software, so there's all sorts of things besides cloud computing, all these things going on. It's just so huge beyond Meta, but Meta has been a really strong performer over the past year, and it still has strong growth seen going forward into 2025.
Right. And I hopefully investors can see that growth continue, but it does seem like there's maybe some questions around some of the longer term bets that Zuckerberg is making on the metaverse and AI. So those comments will be interesting. But let's take a look at the chart, Ed. I'll switch back to the daily here. It's had sort of a nice run since this breakout back here, but looks like it's pulling back and just below that 21-day line. So how are you approaching Meta stock then as it reports?
This is an interesting one here. I mean, it sort of was looking actionable a couple of days ago, but earnings were coming. And again, it was as the 21-day line is riskier. It's just not the same as a full-on base. So it didn't really work out here, but it could find support around this level, maybe the 10-week line. It's probably catching up, especially when we get into next week. So it's sort of been pulling back. The volume you see has been pretty dry in the last few weeks. So that's sort of when you see gradual pullbacks, light volume heading into earnings. So if it sort of continue to pull back or move sideways, you can imagine a scenario where it either bounces off the 10-week line or breaks the trend line here. And that could be an actionable thing on that front after earnings. I mean, we'll have to see what earnings are like. It could go badly. I mean, you can look on the side here. While it's had some good earnings reports, if you look to the left there, not even just the left, just on the chart too, there's some massive disappointments on Facebook. Now, nobody's expecting anything like that, but you just can't assume that that these names are going to come out with really good results.
Right. And as you said, such impressive earnings here over the last 4 or 5 quarters. So, it gets tougher to keep that performance going. But, we talked about for the full year, it looks like that growth is looking around 37%, good growth estimated for next year. So, again, as we kind of look into this, anything else about Meta that is maybe catching your interest? We've seen this relative strength line fading here over the last few weeks as well as the stock has pulled back. Anything else with Meta's chart that you're going to be keen in on?
Yeah, it's like the relative strength line has come down, but it's still right near highs. A lot of the other mega caps, peaked say in July, and they're still coming back up. This is at highs essentially. Yeah, it's pulled back a little bit, but it's basically at record highs. It's really been the top performer of the Magnificent Seven or some of these tech titans over the last few months. So really, this is, it's quietly very much a leading stock and a strong growth stock.
All right, well, let's go on to another tech titan, and that's Microsoft. They report earnings on Wednesday, October 30th, and the software giant is expected to see fiscal Q1 earnings rise 4% to 310 per share. And analysts expect revenue to climb 14% to $64.51 billion. And here's why we're watching Microsoft. Again, all about that AI, but we'll also be keen in on Azure cloud computing growth, AI monetization, and capital expenditures once again. So, Ed, some recent news with Microsoft. It looks like they're going to launch some more AI agents that can help with simple work tasks. But really, what I think investors are going to be looking at is that Azure cloud segment. And last year had a really nice, about 29% growth in that business segment. But recently Microsoft's been struggling, hitting some resistance after that CrowdStrike fiasco. So, what is your thoughts about Microsoft as we head into earnings?
Yeah, the stock is not. We'll take a look at the stock a little later, but yeah, that hasn't done great. The growth has slowed a little bit, and I think there's concerns. Can they monetize quickly enough, especially since they're spending so much money? I think more than anybody, Microsoft is probably spending the most there. So being the forefront on that also means they're on the forefront of spending. So that's one of the interesting things. They could sell off on the bad news of capital spending, but that's a good news for Nvidia and so. But ultimately, the dream would be that they say, no, we really are seeing real monetization. It's contributing. They say it's contributing to Azure growth. It's hard to know that. It's like how much is it contributing? How much is it doing? So it's hard to know how that all works out. But that's really what need to see there is to see that growth and see if that the capital spending is manageable in the context and still deliver solid growth.
Right. And let's go ahead and take a look at the chart because it's, we've seen it rising here above this key technical level here, the 50-day line. Looks like the 200-day line is also catching up there. We're in consolidation for 68.35, the official buy point there. But what are your thoughts on the chart?
Yeah, first, another thing is that the growth has slowed, as you can see just down below, just for the last, couple of quarters on revenue, the last few quarters on earnings. So that's, again, it's just a little tougher to beat those things. It's such a gigantic company. On the chart, yeah, I mean, you could have used that recent bump as a place to start a position. It's a long-term leader. So that's often you say, hey, the 50-day line, 200-day line, this is often where you do it. But there's a couple of things. One is that earnings were coming up. And two, this has been lagging. You can see the relative strength line has lagged pretty significantly for the last several months. And really, it's lagged slightly since the end of last year. So this, while it has a long-term track record of outperformance, which is why we call it a long-term leader, really hasn't in the last for the last year. And so that's a concern. Is it really deserving of that title or, um, and so there's that. And I think people should just want to wait there. Now, on other things you could look like maybe after earnings, there could be 441 could be an early entry for it, or maybe even a downward sloping trend line from the top of the base, like going from 468 all the way through 441. All of a sudden, oh, there you go. So, I mean, it's like you can see, like if it punches over this week's highs, on earnings, you could see those places if you wanted to enter. But again, it hasn't been outperforming. Can it really turn around? Can it have another run? Has it had enough of a break? But obviously, a lot of things there. But it could also break down. I mean, that's the thing. It's like if this goes below the 200-day line, all of a sudden it's going to start looking really weak. And that would also probably not be a good sign for the market. It sort of feeds on itself and becomes a vicious cycle in that regard.
All right. Well, we will wait and see how this one continues to set up. But Ed, you thought we were done, but we're not. We've got Google, which reports earnings on Tuesday, October 29th. That company is expected to see Q3 earnings up 19% to 184 per share, and revenue is expected to climb 13% to $86.37 billion. And here's why we're watching Google. In addition to all the cloud growth and AI stuff, we'll want to see how online advertising performs. This will also be the new CFO's first earnings call, so we'll get a sense of priorities on cost cuts, transparency, and more. So, Ed, talk to me about Google because it seems like the sentiment maybe is that there's some headwinds to the business. We've seen maybe search accelerate a little bit in terms of growth there. So, what are you looking at with Google?
A little bit with Meta, online advertising has been pretty strong. It's one reason why earnings have been pretty solid for Google. But it's in so many pies. It's got that, it's got the YouTube, it's got the online advertising, it's Google Cloud is pretty big. It's not as big as Amazon Web Services or Microsoft Azure, but it's a real player. So there's a lot of different things going on there. There was concerns that AI would impact search revenue, but so far they seem to be folding in there, and it doesn't seem like they've lost search market share yet, even though you could argue, oh well, Microsoft's using ChatGPT, there is ChatGPT separately, and there's these other options. Google, I mean, I'm sure anybody using Google will know they'll have these AI search results. Don't seem a whole lot different from what I
Not
saw
always the most
before.
accurate,
Not
but
always
they
the most
have
accurate, but it's online. It's not like people want see things that establish their priors, not the facts in any case. And it seems like that hasn't hurt the business yet. Now that's always a threat. Can they make that AI a real benefit? And when one of the concerns is that they have to spend so much money just to stay where they were. And so that's an issue. So they might win, but have to spend a lot more money to do it. So that's I think been one of the concerns. But
how much of a headwind has the potential antitrust investigation been with Google?
yeah, there's a penalty phase that's now coming through, and it seems like the DOJ may recommend that to break up the company. I mean, that's something that'll be in a few months. They may just say, well, we'd like to do different things like don't pay, have these search deals like Google pays billions and billions of dollars to be Apple's preferred, search provider or mapping provider, and those kind of things. And so if you lose that, then well, actually that would save Google some money, but that would be a much more limited issue. And probably they could work around that. But yeah, there's the potential there. Now, if that did happen, Google would probably appeal for years and years. So it's not something to have to worry about on this earnings report, but it's just something that is going to be out there. And with the U.S. sort of acting like Europe in these regards, you're seeing more and more cases for these tech giants, but especially Google.
Right, and we do have the election coming up, so all that could change. But let's look at the chart, Ed, because Google again sitting right around this 50-day line. That 200-day line's also catching up, but this one also off highs, but technically in a base 191.75 buy point. So, what would you want to see with Google's chart to make you want to buy?
Yeah, this one has relative strength weakness over the last several weeks. And the last earnings report did not go well for them, as you can see. That the left-hand side of the base included that earnings report and sold off on that and then kept falling and then kept falling. It's bounced back some, but nowhere near what it lost. And you can certainly see there wasn't much relative strength gain either. So I'd like to see some more improvement on that front. Definitely would like to see it get above it. Technically, if it got above, say, 169, I think that would be potentially an area where you could be adding to it. Some people might go even lower with the trend line, but it seems like 169 would be getting at least some of that. But again, it's a low relative strength situation. Is it going to turn around? These mega caps have had such outperformance for so long. Can that really continue without amazing growth? Again, the growth is pretty solid here. This is not single digit kind of growth. But that's a concern for me. But there are opportunities out there if earnings come in.
All right. Well, let's wrap up the Mag 7 stocks reporting next week with Amazon, Ed. And the e-commerce retailer is slated to report Q3 earnings on Thursday, October 31st. Earnings are expected to climb 14% to 114 per share, and revenue is expected to increase 10% to $157.27 billion. And here's why we're watching Amazon. We'll really want to see AWS growth. Can it hit 20% revenue gain? And we'll also be interested in comments related to the holiday e-commerce outlook. So, talk to me about Amazon because you've got, it seems like they're really kind of grappling with some of the concerns about the economy here with, that consumer e-commerce segment. We've also seen more competition from Walmart and China company Temu. Um, but it looks like AWS really is kind of that centerpiece of where investors are going to be looking for that growth.
Yeah, that's not just the revenue growth is great, but that's really just high margin. I mean, that's the thing is e-commerce can come in with sales, but how much? You make a penny off of those? I mean, it's just so hard to make big profits off of e-commerce, whereas the AWS is just much stronger in there. And that's also tied in with AI as well, and just all of that. So that's sort of like the seem is like the sexier part of the business. There's also the advertising part of the business, which is sort of tied in with e-commerce, but that's sort of a growing field. It's pretty small, but that's again fairly high margin for them. Yeah, I mean, can they do it with e-commerce? Can they do it with AWS? Again, there's just so many fields that these companies are playing in, and they're all going to just filter out to so many others. How much capital spending do they do? Their guidance, obviously we always look at guidance for these companies, but they seem to have wide margins. Whereas other folks is that you just like, oh, it's going to be like this. It's like Amazon will say, we have this boom to boom. It's like, wow, that's a huge, huge range for just the current quarter. And so it's always interesting to see how the market reacts to those things. You can see that the last couple, like the last earnings report really sold off on that, but then immediately sort of turned around again. I mean, that's sort of like, so that was nice, but you just don't know how that goes. And if you can't, withstand a big drop and then hope that it turns around a few days, few weeks later. So again, the risks are pretty high, even with these established names. Everybody knows them, everybody knows it's going to be around. Again, on the fundamentals, the earnings have been very strong. It can be really wild, and it was really easy comparisons. On some cases, those are going to get a lot tougher because you can see we've had these enormous gains in the first couple of quarters, but it's only supposed to be 63% for the full year. So while it's going to be solid growth, the comparisons are now going to get much tougher than what we had been seeing.
Right, and you talked about that capital expenditure spending, and I thought it was really interesting hearing the AWS CEO Matt Garman speak at a Wall Street Journal Tech Live event, talking about that nuclear deal that they had, and I think that really kind of gave a boost to shares. But realistically, when those modules could come online, they're looking maybe 2036. He's hoping by the end of the decade, but we really interesting to see how AWS manages that energy problem that comes with all the AI data centers. And also another company that is possibly facing some antitrust scrutiny.
They all seem to be facing scrutiny, and it's just difficult. And it's not clear on a new administration if it's a different one. If it's the Harris administration, it might be more of the same. Trump wasn't that necessarily that favorable to some of these companies. There was a lot of action during his administration, so not necessarily a lot of relief either way. And I just think that, again, you were talking about the nuclear. Yeah, I mean, it's not just all these tech names, but it's like these utilities that are doing the power. Then it's these nuclear angles on top of these. Some of these crazy startups, some are fairly established, just heating and cooling companies. There's so many companies that are going to be reacting to that. So yes, so many industries are going to be keying off of Amazon, on Microsoft, all these companies, and what they say they're going to be doing and buying in the coming months and years.
And Ed, you pointed out some of the fundamentals, but let's take a look at some of the technicals because Amazon, again, we're in this consolidation at 201.20, an official buy point there, but we've seen it, trying to hang tough here at this 21-day line. That 50-day line looks to be catching up. So, what are your thoughts on the technical action?
Yeah, again, the relative strength line hasn't been great. Again, it's below all-time highs, and the S&P is basically at a record high. So I mean, it's like you don't even need that line to tell you it's not at highs. It's lagging the S&P after a pretty decent outperformance, but it's been lagging for a while now. You could sort of treat almost this little area like as a handle within this consolidation, or a base within a base. So if it got above those levels, probably around the 190 level from about 6 weeks or so ago, that would be an entry. Just from last week would be an early entry, I think. So there's a few entries you could do that, or a trend line. So I think there are potential entries on this name. This one might gap up or gap down 10, 15%. So all the little sophisticated entries that you might devise might have to throw those out the window a few minutes after the earnings come out. But it definitely could turn around again. This is later in the week. So one nice thing about this is that we'll have already had the other names. So they'll already be out. This is going to be the last one. So maybe these stocks will be whipsawing, but this will sort of be the last one. Keep in mind, there's still so much other news beyond that in terms of the economy, the election, and the Fed just in the week after the Amazon earnings. But at least the big week of tech earnings will sort of wrap up with Amazon.
Yeah, so you're thinking maybe Amazon slides under the radar there a little bit with all the news that's about to
Or
barrage.
or you don't have to have this breakout and see somebody else come in and have bad news and you go, oh, it came back down. So yeah, so whatever it does, you might think it's going to stay. But yeah, there's just so much going on in the next 2 weeks.
All right. Well, those were some of the big names on our radar. But there's always more, Ed. You thought we were done. We're not done. Let's take a look at Eli Lilly. This one also reports next week. I'm still on the weekly here. This one in a flat base, but it looks like it's on track to close below that 10-week line.
Yeah, so investors have to be thinking about it. I mean, it's not below the low of the base. So when we talk about a decisive close below the 10-week line, maybe this will be, but we sort of say, if it's not below the low of the base, it's not as big of a deal. And honestly, if you were a long-term holder and you withstood the sell-off a few months ago, you're probably not going to get shaken here. Yeah, people are looking for what's going to happen, strong results and the guidance ahead. If they have any news, they're in obesity, they're in Alzheimer's, a lot of other areas. There was news from a competitor, Viking VKTX, that announced maybe what might be a more interesting approach, or even a quadruple approach, and so that's skyrocketed on October 24th, putting a little more pressure on Lilly. So it's just sort of that kind of thing. It's not just can you deliver, can you keep on delivering, and does the prospects look strong for 2026, 2027, 2028 as maybe some rival drugs come in.
Right. And as you can see, that percentage change for earnings growth has been revised down for the year, but still some pretty strong numbers for Lilly. Let's take a look at another pharmaceutical name with Pfizer, Ed. And this one, again, way off highs here, but looks like it may trying to come back off the bottom and below that 10-week line right now.
Yeah, not great. And the thing is, there's a lot of overhead resistance even when it was starting to move up. It moved up a couple of weeks ago because Starboard Value came in and said, "Hey, we'd like to do this and this and that." Like an active investor, it may not be moving there, and so that sort of they may not be making much headway on there. So there just seems to be trouble with this business ever since COVID sort of fell off. Maybe you'll see that growth return. I think that's the thing, is that you're supposed to see growth return for the full year, and you're going to look at the chart. There's no growth there, but somehow for the year it's going to be 44%. So maybe if you start seeing even though people know it's supposedly coming, if you start seeing the growth again, maybe that'll turn around. But you could argue it's like, yes, it could be actionable, perhaps with some strong growth, but you could also say, I'm going to wait until it makes another run. But a lot of work to do with this name, maybe.
All right, well, let's take a look at some financials, starting with Visa. This one setting up in a flat base, 293.07 buy point, reversing lower for the week, at least on pace to finish lower. Again, kind of coming close to that 10-week line.
Yeah, it's not clear here I mean, it's been doing fine, but you can look at that relative strength line. It sort of lagged a lot for the last few months. And, really going back to the end of 2022, it really hasn't made progress. So, there's other payment stocks that are doing better. This is fine, but it's also, you're just like, is it really going to take off? No, maybe it will if you see travel picking up, because that can really sort of get those juicy cross-border payments. But this would struggle a little bit. There's some antitrust concerns. That's one reason why you had this sharp drop a few weeks ago. So there's always those kind of concerns. I mean, it's bounced back, but not ideal right now.
All right, let's take a look at MasterCard as well, Ed. This one looking a lot better. We had this breakout back here in September and had a few weeks tight area here. And it looks like it's hovering just above this buy zone. So, what are your thoughts here with MasterCard?
Yeah, I mean, this one's doing better. Now it's unfortunate it's a little extended, so it's like the opposite. And the relative strength line has improved, but it's not at high. So even though the stock is at highs, it's not there. It feels like there was a chance at the breakout, or even when it sort of cleared this little shelf around 501, a couple of weeks ago. And now it sort of feels like, well, definitely wait for earnings. But it feels like if it acts well, it's going to be extended. So it's not clear if there'll be an opportunity with this name.
All right, well, let's look at chip designer AMD. That also reports earnings next week. And, this one's kind of been a little back and forth lately, not near highs, but also looks like it's on pace to close below the 50-day line here. Also, the 50-day line below the 200-day line. That's never really good to see. But what are your thoughts with AMD?
This is like a lot of people are excited about because for a while they had a big run, but it's the clear laggard right now versus Nvidia. The growth is finally turning around, and yeah, they're going to get some growth because there's such a demand for AI chips, but it seems to be a little bit of a step behind, and it just can't get the same thing. It came out, it sold off a couple of weeks ago when they announced some new measures, so the market wasn't that enthused by their upcoming projects, and it just isn't doing that great. And so it's just as when I tried to move out, it's really lagged quite a bit. Where Nvidia and other names have made some big strides, or at least held up in the last few months. This one just seems like it needs to really show that it can become a leader again. And I don't know if that's going to happen this time.
All right, well, let's take a look at Uber. They also report next week. And this one peaked above a buy point, but it's pulled back. Ed, I'm curious. I want to get your thoughts on the chart, but I'm curious on how you think Tesla's robotaxi news has impacted Uber stock.
It's definitely impacted it. I mean, it surged on the October 10th robotaxi event because people sort of because they didn't say anything about a robotaxi hailing. They showed a robotaxi, but they didn't give any sense that there'd be a ride hailing service. So it gapped up and then it pulled back a little bit. And then there was other news reports that maybe Uber might put in a bid for Expedia. That hasn't happened yet, but Uber's boss was the boss of Expedia a while ago, and he's still on the board. So it's not shocking. So, but now with Tesla earnings, and they actually said on that call, yeah, we're testing a ride hailing service, with a safety driver. I mean, it could be years and years away before that happens. So you don't know if that would be a threat, but it's something that is definitely impacting the stock. So it's pulled back. You could argue that 78.45 was the real buy point. So it's just below that because that was a handle. So maybe, if it rises strongly off of earnings, but yeah, with earnings coming in, you just don't want to be doing that. But that's also just another headache is that you never know when Elon Musk is going to say something that's either positive or negative for Uber. And so that's just another out there thing, do not say today because, whatever, but 2 months from now, everything could be fine. And then Tesla says this or that, whether it's concrete or just hypothetical, it's something that Uber investors have to deal with and are going to have to deal with presumably for a while.
All right, well, let's take a look at a related name, and that's DoorDash. They also have earnings. This one extended after a breakout back here in September, but this chart looking pretty good, Ed. So, how do you want to see this set up then for potential new entry?
I mean, this would need to pull back. I mean, it need to film at least to the 21 day or find some kind of shelf. You can see that there was sort of a add-on entry around 146. I suppose some people would do new position, but it really felt more like an add-on entry. It needs something longer. It needs to come back at least to the 21 day. I'd like to see a lot more, but I don't know if that's going to happen. Uh, but it's acting great. It's a good sign. This whole area is doing pretty well, and this is definitely a leader.
All right, well, let's wrap up with a couple oil and gas names, starting with Chevron. And this one it looks like trying to kind of stabilize here around the 150 price point, but uh, looking pretty wild in this consolidation, Ed. So, what are your thoughts here with Chevron?
Not doing great. And obviously, it rebounded some when oil prices came up, but it didn't rebound as much as a lot of others. And I've got a feeling the next one you're going to show us is going to look a little better. And oil prices have come down a little bit. Again, the earnings matter and what they say about production and capital spending, but in some ways those matter more than earnings because you can sort of figure it out. You sort of know, I know what the price of oil is. The analysts can probably do some of the math themselves on that. And we have a pretty good idea just from today, what the next quarter will be like. So yeah, but
Well,
Exxon, I
let's take a
think,
look at that other name then. Let's take a
yeah,
look at Exxon because yes, you're right. This one does look better. Broke out on October 4th, but it's since pulled back and just around that 21-day line, this 120 point. So talk to me about Exxon and what you're seeing with this chart.
again, it's going to depend so much on oil prices, but this sort of came back down to that 120 area. I mean, it's just below that, but the 21-day line, the 120 area, there was a lot of trading there. So it's trying to find support there. You could treat this sort of as a high handle, I suppose, with strong earnings. If it jumped up on earnings or maybe on earnings and oil prices, I wouldn't do it before earnings, but if that would be something that could be actionable. But again, you just don't know with oil prices, and that a lot of that depends with China and what OPEC does. And so there's always those things, and it just doesn't have a lot of momentum right now, oil prices.
All right. Well, Ed, you're off the hot seat for now. That was a lot to get through. I really appreciate your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today. That goes live after the closing bell. Thanks so much for watching, and we'll see you next week.